So I guess what I'm getting at is if you believe that the system is coming down, or not even just coming down, just say you believe we're going into a bad recession and things will be okay on the other side, you got to get to the other side. And in order to get to the other side with wealth, you have to be in cash. And truly, cash is gold, because gold is money and nothing else is. Everything else is credit.
On October 13th, analyst Rashad Hajiyev tweeted that gold finally broke out from a 6-month descending wedge and likely it will not stop here. Towards the end of the next week, I expect it to reach $2,000 mark, following which I expect a consolidation before it breaks higher to all-time high. Bill Holter is a respected financial writer and an established expert in gold and precious metals. In this video, Bill views gold as actual money, contrasting it with credit-based currencies while emphasizing its enduring historical value. Gold prices saw their strongest performance since early spring this week, with the precious metal buoyed by short covering and a strong safe haven bid at both the beginning and the end of the week. Holter is optimistic about silver's dual role as an asset and currency, mainly due to its broad industrial uses and the 85-to-1 gold-to-silver ratio, contrasting the 10-to-1 mining ratio. A bridge over this gap between precious and industrial metals is silver. When market participants analyze silver, they are looking at a precious metal and industrial metal at the same time. Approximately 50% of the annual silver supply is used in industrial applications. Silver is second only to oil in the amount of industrial applications this precious metal is used for our day-to-day conveniences. Holter predicts gold's superiority for wealth preservation during economic crises due to its intrinsic value compared to fiat currency. Buying physical gold is a time-proven method of securing generational wealth and a security measure often taken in times of economic turbulence. Throughout history, as coins and currency became debased, those who had more precious metals on hand had many more options for purchasing what was needed and investing. Furthermore, Bill Holter cautions that a $5 to $10 billion investment in precious metals may disrupt the financial system, known to potential adversaries like Russia and China. We are now presenting clips of Bill Holter's insights from his recent interview with Andrew Maguire. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Just think about trying to buy a dozen eggs. Here in the U.S., in a barter situation, you would use a pre-1964 dime. There's no way you could buy groceries with gold because you could never get change back. And the reason I've been so bullish on silver is basically just the ratio. Right now, it's 85, 86 ounces of silver to buy 1 ounce of gold. It comes out of the ground at 10-to-1.
Yeah.
That's God's ratio is 10-to-1. Man's ratio is 85-to-1. One of them is right and one of them is wrong. Silver at this point, I believe silver is the cheapest asset on the planet. And it's not just an asset. It is also, yes, it is an industrial. It's used from an industrial standpoint. I mean, you name the uses, whether it be medicinal, solar, technological, et cetera, but it's also money. It's a hybrid. And gold, you mentioned gold as an investment. I don't really view gold as an investment. I view it as money.
Yeah.
Gold it's been the money of kings for, forever. And if you think about, what's the best thing to do if you know you're going into a recession, depression, financial collapse, you want to go to cash. The only problem is cash today, in today's world, cash has been bastardized because it's fiat. It's backed by nothing. It's really not cash. It's a contract. It's a loan to whoever issued that currency, whereas gold itself is money.
Yeah.
So on a big picture, and I don't know, I can't tell you exactly what the number is, but I'll just use broad numbers. And I guess I'll ask you a question. What if a sovereign, or not even a sovereign, just some hedge fund, stood up and publicly said, we want to buy 5 billion or 10 billion of gold or silver? God forbid, if it was silver, you'd blow the top off of it before the words came out of the mouth. If that were to happen, if somebody publicly said, I want $5 or $10 billion, that's going to be a failure to deliver. And the entire game is over, because what you've done is you've drilled a hole in the foundation, put dynamite in there, and lit the fuse. It blows up the entire financial system by creating a failure to deliver. Now, I know you know this. Probably many of your viewers know this. If we know this, you could pretty much bet that Russia knows this, China knows this, any adversary of the United States knows this, that they could blow the system up. A super small number. I mean, 5 or 10 billion today is nothing. Look at the average, treasury financing. What are they? 30, 50, 70 billion dollars at a clip. So just a small portion of that would completely wipe out inventory. There'd be a failure to deliver. And human nature is, if you can't have something, you want it even more. And that's what it's going to create.
Bill Holter contends that central banks aimed for control by intentionally indebting the U.S. on a massive scale, resulting in global indebtedness. The IMF's Fiscal Monitor, released on October 2nd, shows that the U.S.'s and China's total non-financial public and private debt to GDP rates have converged at about 270% of GDP, with the U.S. making up 30% of the global total and China 20%. Meanwhile, Holter believes the current financial turmoil is part of a deliberate plan, with the ultimate goal being global CBDC. A breach of a CBDC system due to cyber attacks or technical failures could erode confidence and trust in the infrastructure, a central bank, and potentially the financial system, in addition to generating a range of reputational, operational, and legal effects. He also advises against using gold or silver to pay low-interest debt, which could mean trading valuable assets for devalued currency.
The plan was to get the United States indebted. Central banking is all about control, and you can control business. And I think the plan was to get the United States indebted, massively indebted. And here we are. The whole world is massively indebted. You raise rates, you blow up the whole system. And then what's left? What's left is much easier to control countries, to control populations, basically to control everything. So I believe that it's the final chapter of the plan. I believe the plan went all the way back to 1913 when the Federal Reserve was created. From a financial standpoint, you want to get out of the system. You don't want financial or any intermediaries between you and your capital. From a personal standpoint, you want to become as self-sufficient as possible. You want to strengthen yourself. And financially, you want to pay down debt if you have the ability. And I would not necessarily pay down debt with gold or silver, because if you've locked in a low interest rate, you're going to end up paying off funny money with real money. And the real money, it'll take you way less ounces to do it. Right? In my opinion, this is absolutely a plan. I believe the whole thing has been a plan since 2007, because the policies they were putting in place back then and ever since then have been too stupid to be any type of mistake at all. So I do believe it is the plan. And I think the ultimate plan is bringing out central bank digital currencies on a global basis. And that, of course, gives whoever's running the show, it gives them total control, because they know anything and everything that you do financially, down to a stick of gum. They're going to know you bought it. It also gives them the ability to shut you off. It gives them the ability to shut you and I off, because we're not talking the mainstream talking points, because we are sandpaper to them, and it's a way for them to snuff us out. And what I'm getting at is they're going to break this thing so bad that the public is going to beg for a central bank digital currency, even though there's going to be 20, 30% of the population's what the real goal of central bank digital currency is. But things are going to be so bad just in order to eat. Please give us the central bank digital currency. We have to have some semblance of normalcy. And that, in my view, is the powers that be snapping the trap shut on the populations.
Experts anticipate continued growth in gold and silver due to economic uncertainty and global financial policies driving interest in these metals. Growing chaos in the Middle East continues to fuel safe haven demand for gold as a 2% rally into the weekend also puts pressure on bears in the marketplace. In the current economic system, how can you optimize your investment in gold as its appeal continues to rise? Share your thoughts in the comment section below. If you find this video informative, don't forget to your support towards our channel and turn on notifications to stay informed about our latest videos. See you in the next video.